Hey folks, and welcome to Happy Fed Day. Yes, I got it all mixed up yesterday. So if you watched yesterday's video, you probably were thinking, Dan, what are you talking about? The Fed's meeting's tomorrow, so my bad, guys. I was doing yesterday's video thinking it was that day and whatever. So if you joined me at 3 o'clock, I apologized. So here's what we got. It's Fed Day. So what's in the cards right now? The Federal Reserve is going to raise rates 0.25%. That's what everybody's basically saying. But what we want to figure out is what next? Okay, so here's what we have a dilemma on. We have the inflation running out of control, but it's starting to come back down. And if the Fed would really ease sometimes and let it kind of calm down, things might just work out. And then on the other side of the fence, because they've kept raising rates higher and higher and higher, Treasury prices have plummeted. Thus, the assets that banks are holding are less of value. So now they're maybe possibly insolvent, a lot of the regional banks. So what in the world does the Fed do? Okay, so that's the dilemma they're in right now. So yesterday, remember when I said, okay, here's what's going on in the bond markets. Why is it up 30 or down 30 or whatever? Well, I said it should be zero. Well, now you're seeing why. Everything across the board is basically unchanged. A difference rate here of 0.03 is really irrelevant. It's not going to really matter. And over here, a difference of 0.009 isn't going to matter either. So let's really dig into the news that we're seeing today so we can get an expectations of what are we really looking for from the Fed. We know they're going to increase 25 basis points, but then what? What's the verbiage that we're really looking to concentrate on? Well, hate to say it, but my friends over at CNBC, they kind of nailed it on this one. So here's what they're saying right now. They're saying, let me get my head out of the way real quick. Here's everything the Federal Reserve is expected to do on Wednesday. So if you go down through here, the markets are expecting a 0.25% increase from the Fed, taking the benchmark Fed funds rate range to 4.75 to 5. Okay, that's an important number that we got to look at. This is the highest number since 2007. Okay, so I'm gonna focus in on that in a minute to show you where the federal funds rate, their expectations are, because the federal funds rate, everybody's saying right now, could go up to 5.5%. So I'm going to give you kind of a little brief description of that here in a minute. The Fed could alter the post-meeting statement from saying ongoing increases may be appropriate for something that suggests less certain outlook. Okay, so that's another piece of this. So we want to figure out what the Fed's guidance is. And then Fed officials will release their projections for unemployment, inflation, GDP, which is the gross domestic products, and perhaps most importantly, the peak rate where it will end its rate hikes. So these are all the things that we're looking at for today in the meeting, or the verbiage from Federal Chairman Powell. All right, so let's get over to the next screen we have here. Here's Yahoo Finance. I'm just checking to see what's in the markets. And like I said yesterday, didn't understand why the markets were all over the board. But you can see right now they're unchanged. You go across the board, the S&P is basically not moved. The Dow Jones is at basically zero, and the NASDAQ is same thing. We go through here, Jerome Powell has an obvious problem with no easy solution. So again, that problem is you got banks crashing and you have the economy overheating. What do you do? Okay, so one of the things I want to show you guys is here's all the things that the the Reserve has done over the last year. And it started back in January of actually in March of 2022 when they started increasing rates. Here's how much they increased them. A lot of people don't really get this part of it. They increased it at an unprecedented rate that they've ever done before. And yes, you can go back to Volcker back in the 70s and 80s and say, yeah, he pumped up these rates, but he basically did it in a wham bam action. They just keep trickle bleeding everybody. So here's where these numbers look like. And then again, I want to focus in on this. Back in March of 2022, basically the federal funds rate was almost zero. So they took it up a quarter, 0.25, so 25 basis points, to bring it to between 0.25 and 0.5. I'm sorry, guys, I mumble on these things because I'm used to saying 100 basis points and 50 basis points. So let me explain this to you. 25 basis points, I call them a 25 basis points. This is actually 25.25%. So if I ever say 25 basis points, I mean a quarter. If I say 50 basis points, I mean 0.5%. 75 basis points is here, and 100 basis points is 1%. Okay, so that's my terminology. So back in March last year, they increased rates 25 basis points. Then they came in the next meeting, increased 50 basis points, and then they went on a rampage. 75, 75, 75, 75, and then so this is all that they've done over the last year. So now everybody's saying, okay, guys, can you really start to cool off a little bit, because this is nuts. Okay, this is completely nuts, because you're doing it way too often, way too fast. And where's the end? I guess basically, where is the end of this thing? So the projections right now are for the federal funds rate to get to 5.5. Okay, so that's basically the peak of what most economists are expecting right now. So let's take it from that right now. If we got right now, the federal funds rate is 4.5 to 4.75, and you can see that right here. Okay, so we could possibly have another 75 basis points hike. I don't think that's going to happen, but that could be in the cards. So how are they going to get there? Well, we know this time they're only going to do 25 basis points. It was up to about a 70 or 75% chance of them going 50 basis points just not too long ago. But with all the federal banks, a lot of the banks being insolvent and runs on the banks and everything else like that, the Federal Reserve is basically forced to just say, okay, we got to do something here. We need to work on the economy, or we need to work on the banking system. Well, I would suggest, why don't you fix the banking system first, so people have, confidence in the banking system and the financial systems, and then let's work on the overall economy. So let's go micro to macro. Okay, so that's my thought behind the scenes. So based on all this, and I'm sorry, I'm just talking about the interest rates and everything today. Well, the main reason is because everything is revolving around what the Fed is doing. So you go to here, and I'll show you the MBS Live that I work on a daily basis. You can go down through here and look at some of these headlines. Euro pushes higher as ECB chief. Lagarde says inflation is still too high. So we have inflation, basically inflation, guys, is all over the world. Sorry, I have a tough time reading these. Treasury yields dip ahead of the Fed interest rate decisions. Here's everything the Federal Reserve is expected to do. And then you go over to this, and here's everything the Federal Reserve has to do. So you can see everything in the headlines is right now is the Federal Reserve, banking, and what they're going to do. So my conclusion here is the Federal Reserve is going to come out and say they're going to increase rates by 25 basis points. And again, that's the federal funds rate. That's not mortgage rates and everything else like that. So if you're confused on that part, check out some other videos that I do in regards to the federal funds rate. And then the verbiage going forward, honestly, being honest with you guys, I don't know what they're going to do. I don't think the banking issue is much of a dilemma that a lot of people are thinking. Yes, it is causing chaos right now, but let's go over to this real quick. And this is Yahoo Finance, and let's go over to my watch list. So these are the banks that we've been watching this week, because these specific banks majorly got clobbered. And now some financial institutions are stepping in. They're helping out. The federal government's helping out. But what I want you guys to focus in on here's the thing that, when you look at these stock prices, you might say, oh, okay, they're going up or whatever. But here, look at what happened to some of these companies. You look at Signature Bank. Okay, it's $70 a share right now. It's down 22%. I think they stopped trading at this. I'm almost sure, because it doesn't look like this is, it says open. I'll check on that for you guys. Look at the 52-week high and low. Okay, the 52-week high and low, $61 is what we're at just recently. The high was 319, and now it's trading at 70. But guys, this is a one year difference. Okay, you go back to UBS. UBS is a high of 22, and right now 20. What they did is they're coming in and buying Credit Suisse. Look at this one, First Republic Bank. It's currently trading at $15 a share. Its high, 52-week high, $173. Credit Suisse, currently trading at 90 cents, had a high of $7. That is absurd. So some of these companies, like, for example, First Republic Bank, if it was valued at 173 not too long ago, they come in, they become solvent, they become an operating company, treasury settled, and everything else settles down. Could they at least go to half that price? How much of a gain would that be? So I'm not telling you to buy. What I've currently done is I increased my positions on my XLF holding. It's an ETF of financial stocks. But I'm not a financial provider. I'm not a financial educator. I don't trade stocks. I'm not licensed to do this. I'm just showing you guys for an educational purposes what all the news looks like and what I'm personally doing. You can watch me and do the research on your own and say, okay, Dan made some good investments. Maybe I'll look into those and do them on my own. Or you might come back and say that's a completely terrible bet on his side. And I'd love to know that from you by letting me know down below. So based on all this stuff, what's really going on? So let's go over to the ticker here in the MBS markets to see if there's anything going on there. Nope, you can see that those are completely still flat. We got the MBS 6.0 and the MBS 5.5. Basically, they're both completely unchanged. So let's go to Mortgage News Daily and see what they have to say about some things. So let's refresh this because it doesn't refresh on its own. It is saying it's down 5 right now. That's contradictory of what we're showing, but they're giving you the MBS coupon of 5, which isn't as accurate is the 6.0 right now. So, but that's okay. It's only down 0.06. So you can see basically it's completely flat. Nothing's really going to change all day until the Federal Reserve announces something. And they're going to come out and say what they're going to do. They're going to come out and say they're going to increase rates 25 basis points. If they do anything else than that, it's going to shock the system. But then everybody's going to sit basically on pins and needles to wait for Federal Chairman Powell to come out and really tell us or talk so we can get in his words. And then he's going to be quizzed by a lot of reporters and things like that. We want to pay attention to what he says because every word, and trust me, every word that he says is scripted. So we're going to dive into that with a microscope. And then at 3 o'clock today, we're going to do a live event. Come back and join us then because I'll put all this into context for you, what they did, what their guidance was, and how that's affecting the markets and what the next expectations are going forward. So that's my report for today. Here's where rates are. These are the top 6 products that people use when they're getting a mortgage. And if you want to check out these rate sheets, this is published by Mortgage News Daily on a daily basis. These are not my rates. Basically, I just published this to let you guys know, here's what's going on with rates. Are they going up or are they going down? Because this obviously isn't the exact rate that you're going to get, but these are the top 6 products that people use when buying or refinancing a house. You can see rates right now are steady at 6.75 on the 30-year fixed, and the range, 52-week range on this was 4.66. to 7.375, and we just saw the 7.375 about 60 to 90 days ago. So it's easing. It stayed down a little bit, and but unfortunately, going from here, we really don't know. We need the guidance from the Fed. So that's it for today. Come back and visit me at 3 o'clock. We have a live event. I'm going to tell you what the Federal Reserve did, and then the ripple effects through the economy and what that's looking like. So thanks for watching, guys. God bless. I'll see you in a little bit. Bye-bye.